time now for charting futures. Let's bring in Abigail Doolittle. And of course, Abigail, stocks may be down again today, but not so much for the precious metals.
You're right about that, Scarlett. We do have a rally for the precious metals. Not surprisingly, a bit of a haven bid here, up about 0.6% on the year, or on the day, I should say. On the year, though, huge gains. So really a continuation of what we've seen. Let's take a look at the year-to-date gains for both gold futures and silver futures. We're going to take a look at that. Gold futures up about 16%, on pace for the best year since 2010. Silver futures up 8%, on pace for the best year since 2016. Much of this having to do with the accommodative policy of central banks around the world. Plus, again, the bit of a haven status here, especially for gold being used in this time of macro uncertainty around trade war, economic slowing, and other factors. But will the rally last? I've certainly been surprised by the degree of the gold breakout more recently. This is the RSI on the gold chart over the last year, and we see that it has swung wildly from overbought above 70 in red to oversold below 30 in green. This year, we see that we've had a tremendous run up here in 2019, going well into overbought territory, then back down. It seemed like we could see gold at that point really move back toward the previous lows of the year and last year, but now back above into overbought territory. Often people think that's a bearish thing, but technicians actually like to see that so long as you can take out the last high. That may not happen on this particular chart. In turn, that could prove to be a little bit bearish, at least for the near term, some near-term momentum being lost. To bring or talk more about all of this, I'd like to bring in Steve Sosnick of Interactive Brokers. Steve, great to have you here. And what do you think about this rally that we have for gold and silver on the year? Pretty tremendous, especially gold.
It's certainly the haven right now, and you're seeing all sorts of safe havens, and also, of course, the cost of owning any sort of precious metals declines as the interest rate alternative, at least on a relative basis, continues to go down. So it doesn't surprise me to see this gold rally at all. And the question then becomes, does silver play catch up or not?
Well, here we have your chart to answer that question.
Well, the chart that I pulled up was basically, I went back 5 or 6 years here, because you could see for most of the time prior to about 2016 or even into 2017, you saw them more or less trading in lockstep. And then gold started to outpace. I think a lot of the underperformance that we've seen in silver is because of its use as an industrial metal, as well as and less of a safe haven. It's sort of quasi-gold, quasi-copper, if you want to think of it in that sense. And so my thought would be, do we really push higher? And if we're going to push higher in silver, it's going to go fast. If we don't, we're going to run into some resistance and clog up, and it's not necessarily a great long under those circumstances.
Yeah, if you recall 2011, in 2010 into 2011, gold had already been up a lot, but silver went from about $9 to $50 in like a month. So Who knows if that happens again. So you're talking about to preserve capital or a way to limit downside the options. Let's take a look at your option strategy here on playing silver futures.
This is a plain vanilla option strategy. If you think silver is going to rally meaningfully through 17, you buy the 17 calls. They're the SEP calls. They actually expire the August 27th. It's just a peculiarity of the exchanges. But basically, that's what I would want to do if I'm playing from the long side. Is I'd really want to limit my downside, because if this reverses, it's going to reverse hard and fast. In this case, when you buy a call, you limit your exposure. You have to have a bit more of a rally. You have to have more of a conviction. If you buy the options around 29 cents, you've got to get over 17.29. We're about 17.06 last I looked. And it can be done, but this way you have the upside. You limit your downside in a way that lets you play the futures without. And
the downside limited to about 29 cents
exactly
per contract.
Yes.
Or per option.
Price paid, whatever you pay. It's limited to the price you paid, and then right now it's about 29.30 cents.